All right, everybody, welcome to the Invest with Jacob live trading live stream. Happy Wednesday, happy hump day, happy August. We are back for another week. And today, if you're new here, what we're doing is we are going to demonstrate two indicators, probably just one today because I'll show you why in just a minute. Um, but on the left side of the screen, we have the 1 minute futures chart for the ES. And we would be using Squeeze Sniper on that screen. I don't think we're going to be trading it today, and I'll show you why in just a minute. And on the right side of the screen, you have our Pivot Point Pro, which gives you the buys and sells here. And they're two very different products. This one looks for squeezes in the market on the left, and the one on the right here looks for reversals in the market. So it's looking for tops and bottoms. We don't trade the after hours on Pivot Point Pro because the volume is very low and it's not as accurate as it is in the daytime hours. But it is a super simple indicator to use. You get buy and sell signals. Trend day, we don't get a buy signal on a trend day, unfortunately. So let's see. We've had 4 trend days in a row. They've been ripping pretty hard. So let's go back a few days here. That one's after 12. So I'm trying to find an example. We've had a lot of. There we go. So looks for the bottom, looks for certain criteria, gives you the buy signal here. You take the buy signal, off we go, and a very good day. Now we only trade this from 9 to noon, which is why I was ignoring ones that had signals on the second half of the day. Like this buy signal, the biggest reason is the second half of the day is generally very choppy, or it's a continuation type pattern, and so it's one or the other. They've established a trend for the day, or they do this. So this is not tradable in a good way. So we ignore anything after noon because the volume drops off and it comes into the close. Or they've established a trend and they just kind of grind it higher, and those are also not great tradable things. So early in the day, we're looking for a buy or sell reversal, and it gives you those off of the lows. Does a really, really good job. We are up 26,000, I think, on the year, over 100,000 over the last 2.5 years, and that is on a $100,000 account. So we've more than doubled our money in 2.5 years using just that product and the rules that I teach with it. And you get all of that if you get the product at investwithjacob.com. On the left side, we have Squeeze Sniper. I'll make this bigger so we can see it a little better. So the thing that we have a bug is the reason we probably won't be trading it today. This is a version that is not released because I'm always testing the new versions. I need to see live trades and how they happen. So I'm always with the version that we're testing. It has all the same basic ideas. It's just got either upgrades or bug fixes in it. And so we found a bug in this one that we're fixing right now. And that bug is this red line down here is your stop for your runner. And if we go back here a little bit till yesterday, we entered a trade down here, which is great, at 76.38, and then maxed out how high the support runner can go because they went nuts. And we are now up at 78.06 without ever being stopped out of our 76.38. So the trade is brilliant. It's a 180 point trade, 170 point trade on the ES with our runner. So we take some profit at the first resistance, we take some profit at the second resistance, and then we let our runner go for instances just like this. However, our support didn't follow. So it's going to be, and we would still be in the trade either way, but the support line should be somewhere up here. And they're just, it didn't move up. So we are well above this stop out. So I don't think they're going to drop 170 points today, which means this trade will stay open until we come back down or I get the bug fix out, which should happen at some point today. But we just realized this yesterday when I was looking for trades overnight and stuff. I was like, how come we don't have anything off of certain setups? And the reason is because the stop is still way down here and the trade is way up here. So trade's perfect. Overall, you can see for the ES, still have a few things we'd like to work on, but up 100 point, well, going to be up about 200 points after this. trade in the last 3 weeks. 30 and 20, 60%. We'd like to see better, and we will when we go over the NASDAQ. You'll see better. A little bit of a rough spell over the last 10 trades or so, but even with that, even with a rough spell, we're still over 100 points positive on the NQ. Same issue. I would trade the NQ, but the stop is way down here. We're up way over 1,000 points on the NQ on this trade. Which is good. Again, the support line or the stop line should be up here somewhere. We should still be in the trade. That's the whole point of the runner. But you can see 66% is more like where we want to be for our win-loss rate over the last 13 or 12 trades. Yeah, 12 trades. It's 11 and 1. It's up 350 points. When you add in this trade, it's going to be significantly higher than that over the last 3 weeks. So Sniper is an incredible product. It still has a few issues, and those issues are simply bug fixes. They're not issues like, oh my gosh, this is terrible. So we are still working on it, and while we still continue to work on the beta version, it is discounted. You can see the link down in the description, and you can get Squeeze Sniper right now for $20 off a month or $200 off a year, and that is down below. So that's what we're doing today is we're demonstrating these two indicators. The SPY is on the 5-minute chart. The NQ is on the 1-minute chart. Again, don't think we're trading the Squeeze Sniper today because of the stop issue. Let's go over to the bigger picture here. So they are hitting a key area. This 7,800 area is the 2.0 of the move up. I did think they would extend into this area, and now I think we should be looking for a pullback, and then that pullback will be pretty important to the overall structure because the pullback should come back into these highs. They didn't test these highs or stop at these highs or anything. They just plowed right through them. And almost always when that happens, they're going to come back and visit them. And if they back test and hold, then we're going to look for 8,000 overall. If they back test and fail, then we could have quite a meltdown on our hands back down towards the 7,300 or below area and a potential distribution style top. Long way to go for the distribution style top. The bulls are in 1,000% full control of this market. If you've been just following our live trading and not our closing calls, I've been talking for a long time that this structure here was not a top and needed at least one more high, and we are seeing that now. So we got our 4-5 on the ES. Now the question is this going to extend or fail? And that's really the crux of where we're at with what has happened off of this low, moving toward that 8,000 area. Now, in general, I would think that if they're going to get this close to 8,000, they're going to tag it. But the market loves to run elaborate traps. In 2022, we got really close to 5,000 and failed right below it, like 48 something and change. So certainly very possible they come up and fail just below 8,000. Everybody looking for 8,000 to take profit because it's a big round psychological number, and then they just fail it really hard. The most accurate comparison I have, a lot of people have doubted that this could be a wave 4, that we're going to get a pullback and a new high, all those things. Markets just don't tend to top that way. If we go back to 2022, which was a significant top, you can see October of 22 or 21, really, October of 21 over here, we had the same exact kind of run up where you had a quick 1-2 and then a very long extended wave 3. Then you had a small pullback and a high, then a very deep pullback, then a very choppy high. So we are here in this 4-5. In my opinion, we could see one more deep pullback and higher, or you could see a deep pullback and failure. But this is a distribution style top here where you have a hard charging high. Oops. You pull back very deep, you make a nominal new high, you pull back very deep, you make a nominal new high, and then you come back down like this and break the backside, and then you come all the way down to complete the distribution setup, and then they just run it down from there. So very similar in my opinion. I think we are somewhere between here and here, where we could see another deep pullback and then one more high. It will just kind of depend on the next few days and weeks and how they play out from this top. If they decide to pull back and fail the prior highs, then we could be setting up for a bigger drop. If they can hold this level, and by hold, I don't mean they have to stay above it or just touch it and go up. They can hold it, and but they can hold it by running a trap of it. So they come back down. This is how they get sellers involved, and then they come back up, come back down like they're going to sell off, and then they go up. That's how they hold support most of the time, or a lot of the time. Sometimes you get a V shape where they don't give you this little pullback here and they just go. But when they're going to hold support, they typically will run through it, get back above it, act like they're going to sell again, and then rip it. And then you're kind of trapped here if you're short. And that's what they're really trying to do, is create liquidity for the next move higher. So if you want to know how the market works, if you just imagine the market's going up, okay, and if you're a news-driven person, if you think the news matters, I'm going to give you a lesson in supply and demand and just straight economics, because it's certainly not about the news. Now, the news events can become catalysts for the market. In other words, when the Fed talks, the market moves. When CPI comes out, the market moves. I'm not saying that the news doesn't move the market. I'm saying that what they say in the news and the tone of the news and the headline of the news doesn't matter. It's why you get bad earnings reports and stocks shoot up 20%, or you get lights out earning reports and they go down 10%. It's why global wars cause market expansion, and lowering inflation can cause a 5% drop. In the short term, none of those things matter. What matters is the supply and the demand, the price action, and the sentiment, and how that works. So we're going to do a quick lesson on that. As the market moves up, at some point it gets extended enough that I can no longer buy. And what I mean by that is, in order for me as an institution to buy the market, there's two things I'm looking for. Number one is a good entry. I don't find the top to be a good entry if I'm an institution, because I'm trying to buy millions of shares. So I'm going to slow down my buying. So the institution money comes in here. Now the institutions want price to go higher because they bought down here. However, when they pull their money out, and then the sellers look at this and they say, why would I sell into this? It is absolutely running people over. Well, if nobody's selling the market, you can't buy the market, right? If nobody's selling gold, you can't buy gold. If gold is sold out, or if t-shirts are sold out at your local store, you can't go buy t-shirts. You have to have the inventory there. So the institutions will do one of two things. They're either going to start taking profit and be done with this position, or they're going to create liquidity in order to push the market higher. So when somebody says they're building energy for the next move higher, this is what they mean. They need liquidity. They need people to sell the market to them so that they can buy it back up. So what they do is they take profit in a very strong way. They will push the market back down because they are taking profit up here and pushing very hard on the sell side. Late buyers, who are usually retail, and usually the guys that, when the market has made its huge run, they're the last guy into the market because they're like, oh my God, I heard about the stock market today. I should buy something. And they get eviscerated, and then they say the stock market's rigged. So they sell into those people as hard as they can, bring it back down to support. They will break the support. So if this black lines are support, they will break the support in order to get more sellers into the market. Because once a support breaks, the sellers' ears perk up and they go, oh, look at that. We got a broken support. Maybe we can see a big drop, because everybody really gets hyped up about a market dropping because it drops faster than it goes up. So all the sellers pile in. They bounce it. They get the late buyers involved here. They come back down. The sellers are like, yes, we broke support. We got above it, and we broke support again, but they didn't remember we got to break this low. This creates a whole bunch of sellers and a whole bunch of new optimism about selling the market. That is the liquidity they need, so they can now buy the market at the price they want at support. They buy it as hard as they can into these sellers, and we get the squeeze that takes us to our next high. So that is the market dynamic, and that is how it works. The institutions control the market because they have all the money, and they just constantly run traps at highs and lows so that they can get liquidity to push the market in the direction they want it to go. And what we do is we try to identify those traps and that liquidity so that we can be on the right side of the money. They've trained us as a human population. We are a herd, just like African herds. We live in cities, we live in groups, we live in families, we work at companies. We are in political parties. We have the same ideologies in large groups. Now, not all groups have the same ideology. For instance, zebras eat grass and lions eat zebras. So not everybody thinks the same way, but they all operate in their own herd. And as a collective, we are a mental and emotional herd. And human beings to their core are the same emotionally. So they want you to get emotional. They know when you're going to get emotional. They know when you're going to get FOMO, and they know when you're going to pull the trigger so that they can run their traps and they can reverse you, and you become the liquidity. We try to change all of that by teaching you, one, that you've been quote unquote brainwashed to believe a certain way about the market. You have the market makers, you have the institutions, you have the talking heads on TV that all create a narrative that they want you to hear, and then they half the time do the opposite and the other half the time can follow through. But the idea is what they're doing is creating one narrative across the market so that everyone is thinking the same way, so everyone is in the herd. And then they always do the opposite of whatever they're thinking to run their traps, and then they do the move. So what I mean by that is Jim Cramer's on the TV going buy, buy, buy. Bill, the next guy's on the market going, we're long everything. And ultimately, they probably are, and they're probably right. What they don't tell you is they're long because they bought CAT 10 years ago, and they're not selling CAT, and they're going to let CAT run, and they think it's still a strong market. But what's really happening is the institutions want to buy, buy, buy as well, so they create the liquidity, run the trap. You've heard everybody say to buy, and then you just got smoked because you're buying in the short term, not the long term, and then they do this. And the big scheme of things, it's all a trap in the day and swing trading arena. In the buy and hold arena, it's very different because you can just buy and hold. You don't have to get the emotional attachment to a position that's expiring or a position that's bankrupting you in that day or liquidating you. So it's a big emotional game that they play on the markets. So anyway, that's some lessons in how market behavior and price behavior work. Let's look at the NASDAQ. That was a big side track there, guys. Sorry about that. Hopefully you learned something. We are at a major level on the NASDAQ. That 30,000 level is going to be really, really big. You can see they came into it this day, 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 this day. All of them around that level and failed, or came back into that level and bounced. So that 30,000 level is the pivot on the NQ. If the bulls get above it, then off to new highs we go. If they reject it, well, we could start to see a potential for this to be a dead cat bounce. And the ES does, or the NQ does top first, and the ES usually follows. So the NQ made its top here. The ES just now topped yesterday, or made a new high, I should say. It hasn't topped necessarily. So we are all eyes on the NQ, because if we're going to see that distribution style breakdown that we talked about, then this is where we're going to see it. You're going to see the ES start to drop back down and test those highs. You would see it fail. You would see the NQ start to do this and break down. So we'll see what happens from here. If the NQ is going to follow through, get through 30,000, and if it does, I would expect a new top around 32 to 33, as high as 35. But I think 32 to 33 would be more accurate. And if they don't get through, we could definitely see a backside fallout on the NQ. All right, let's see who we got here. Williamstown, welcome to the stream. Good morning to you. The Crazy Kelly, good morning. Welcome to the stream. Hamza Badami, XAU US dollar. Well, one, I don't do currency. I believe that's actually gold to the US dollar, but I don't do currency. I do gold and I do Bitcoin, but I don't do the dollar. And two, this isn't that stream. That is the afternoon stream at 3:55 p.m. I go through some extra charts there. Today we stay on the NQ and the ES, and we do our trading and demonstrate the indicators. Tomorrow, though, that afternoon call will be at 3:30. So on Thursdays it's at 3:30. Every other day it's at 3:55 p.m. But welcome to the stream. Appreciate you. Glad to have you here. let's see what we got here. Is we got 5 minutes to the open. So let's get back over here and start looking at our charts. A little bit of selling coming in as we. Let me get my stuff ready just in case we need anything here. I'll be interested to see how today plays out. The NQ is fairly weak. It's green. I get it's green, but in the idea that the ES is up 0.5%, the NQ is up 0.15, and I believe you had stocks like, well, I know SpaceX got killed. I think AMD got killed yesterday. Yeah, they're down to 8%. So NQ is an interesting one. If it starts to unravel, ES will follow, and we will see a pullback. But will the pullback hold is the big question of the morning. UB, good morning. Good morning to me. Well, thank you. Good morning to you from Bavaria, South Germany. Southern Germany, Bavaria. It's not Bavaria, it's Bavaria. I'm pretty sure Bavaria. Well, that's awesome. Thanks for being here. I appreciate you, UB. Guys, make sure you hit the like button, hit the subscribe button if you want to make sure you don't miss these live streams. We do them every Wednesday at 9 a.m. and go over indicators. I try to give market education, go through some different things about price action, support, whatever's going on in the day, talk the headlines, whatever is going on. Give me 1 second. I think my dog needs to go out. I'm going to double check, and that should just take a minute before we open here. Okay, I am back. We are ready to roll. Who could possibly going long here? Maybe still covering shorts. Yeah, I think most of the buying now is going to be late retail. Most institutions made their position last week. They took it back down, tested support, got everybody thinking we were going to break down strong, and made their buying pretty evident. And the 400 points in 4 days on the ES is pretty spectacular move. And welcome to the stream and good morning, Sean. Looks like we're going to buy into the open here. Not surprising. That's been a common theme. As always, we're going to be watching semiconductors. They are driving the market. If they're strong, the market's generally going to be strong. We'll be watching Dow Jones Transports. They are the old school and inflationary kind of measure of the market. If the transports are failing, the market is in trouble. And banks up near highs, been rallying hard. We've been expecting a high in the banks for a while. We talked about it a couple weeks ago. And if banks are not failing yet, and I think they will fail big, but if they're not failing yet, then the market is fine. Now, when you get to the point that you start to say, why would anything fail? Nothing fails. It all gets bought. That's when you need to start to worry about the market, because then you're starting to enter that euphoric phase of it doesn't matter what the market does. It's going to go back to new highs in a week. because it's done that and it's conditioning you to think that until everyone gets liquidated like they did on the Kospi. 1.2 million liquidations in a single day. I think it was the highest ever. That's what bubble burst looks like, not choppy sideways, hard to understand price action. But there's still plenty of upside in this market as far as targets go. The 8,000 area is another 200 points higher on the ES, which would be about 4% more, roughly. That's a little less than that, but I guess 78 times 3 is 225. So a little less than 3%, actually. That was bad math by me. One day max today is up at 778.60, so about 2 points higher than we are now. And if you don't know what these numbers or these lines are, they are Mentor Q levels. Mentor Q is an incredible product. It gives you the high and low of the day for options context. And the options market is what moves the market because the market makers are what move the market and they need liquidity. And so what happens is the market makers know they're essentially the bookies of the market. And they know where, based on options flow, the high and low of the market should be in a normal trading day. So the 1 day max on most days will contain the market. However, on the last 4 days, because they have been exceptional days, it has not. And the 1 day min also generally contains the market. And what we call these are hurricane markers, or shorelines, if you will, because the market tends to, it can get above there and pull back and stuff. It doesn't have to stop exactly at that line, but they tend to hold the tide of the market. But just like the oceans, you have hurricanes, and when hurricanes hit the shore, they move the tide all the way up into the houses and the streets and the cities. So when those levels get broken decisively, you generally have a hurricane type day where it just continues in a strong fashion because the market makers are now heavily underwater. And when they're underwater, they have to hedge. So they have to start buying futures or selling futures if the market's going down. So remember, every time you buy an options contract, somebody has to sell that to you. It's a two-person game. It's a zero-sum game. There's one winner and one loser. And the market maker is usually the one selling you that options contract. So if they are selling millions of options contracts to you and they are all calls and they're not getting any puts, then when they get above that price, they're underwater because you have a successful options contract playing out, which means they have to hedge against that loss because all they really care about is the spread of the bid and the ask. So when they do that, hold on, I'm watching this. This has a potential to be a failed breakout, and if it does, it can drop pretty sharply down to 771, and then we'll see what happens down there. But when they are underwater, they have to, on the call side, they have to buy futures, which drives futures prices higher, which drives the market higher, and then you get a squeeze. When they are underwater, the put side, they have to sell futures, which causes the elevator down, piles onto the selling already happening, and creates that big drop. So those levels are really important to understand because when they approach, the market makers really want to defend. So you have a call resistance down here. That's going to be a big one. The put support 0 DTE is a big one. The call resistance up here is a big one. And the 1 day max is a big one that they're going to defend. If they're below the 0 DTE put support, that means they're underwater on that level and for puts on the day. And that's a potential for them to have to start selling and causing that elevator down. Again, we want to see them confirm things like that so they get below it and do this and then break this low. That means that the downside is likely playing out in a strong way. But they will trap this level quite a bit because they know they can. And then they'll squeeze really hard out of here. One, to defend this level, they'll buy really hard, and they can, as long as they can overwhelm the sellers, which generally they can squeeze them out, close out all those positions or stop out all those positions and recontrol the market. Let's see what we got. ADD dropping strongs opened at about 638. It is down to 159. That is usually a red flag. If big ifs here, guys. The market is all about if then statements, by the way. If it continues and drops past zero into the negative, then we can start to say that this move up is a little bit weak and either going to be driven strictly by the semis, which are okay today, or it's going to fail. So you kind of got a mixed bag here. Semis are slightly green. NVIDIA doing very well. Meta doing very well. Microsoft flat. Netflix and Amazon doing well. But then you have Tesla and Apple struggling, and Google doing well. So mostly green in the Mag 7 and SMH. So you would expect them to be able to hold for now. However, if these start to flip red, that will be a very heavy weight on the market. RTY is almost red, something to keep an eye on. It's probably driving the ADD drop. It is now red. We're seeing the SPY drop a little bit here. So we are seeing early selling. Now, that doesn't mean a whole lot yet. They still have to do some work. But if they start to close 5-minute candles below this blue 21 exponential moving average, it starts to look like a failed breakdown. Failed breakdowns tend to target the pre-market low and then the after hours low. So we would look for that to follow through. Again, still a lot of work to do. They got to get below and start closing below the 21. These moving averages are generally pretty strong, whether you're coming up into them or coming down through them. And they are how we identify trends. The red is the 8 exponential moving average. The blue is the 21 exponential moving average, and black is VWAP. And if the 8 is above the 21, the trend is up. If the price is above the 8, which is above the 21, momentum is up. And if the price is above the 21 but not the 8, the trend is still up. So as long as they're above the 21, the trend remains up. As long as they're above the 8, momentum remains up. And VWAP is a backstop for it as well. Same thing to the downside. If the 8 is below the 21, the trend is down. If price is below the 8 and the 8 is below the 21, momentum is down, and so on. So those are very strong indicators to have on your chart, and they're just moving averages, very simple. But if you just look at all charts and all trend days, you'll see that they all follow that pattern of riding the 8. In fact, if we just go look at yesterday, huge trend day, and you can see that once they get above, they just check in with the 8 from here. Here they'll check in with the 8, bounce off of it. They check in with the 8, bounce off of it, check in with the 8, bounce off of it, check in with the 8, grinded, came in to check in on the 21. Tells you the trend is weakening but still holding. They got one more high out of it, and then they broke down a little bit after hours, but not enough to matter. So those lines are very important because on trend days, if you are an aggressive day trader, you can add when they get to the 8. You can open positions when they get to the 8 once a trend is established. They are very good places to understand where the market is sustaining trend or losing trend. Next couple candles will probably be key for the market, at least in the first half of the day. They'll either try to set an overnight low here and grind up into the 1-day max. Not an overnight low, sorry. They'll try to set an opening low here and try to grind up into the 1-day max, and then we'll see if in the second half of the day they can try to break down. They tend to not do that very often. Or they're going to start closing candles below this 21, start working their way down into the pre-market and after hours low, and see what happens then. There's your bounce off of the 21, trying to push out and make the upside work out. But like I said, we have a ways to go here before we have a decision. This does look like they want to make it a trend day to the upside. So when they come out and break the pre-market high or the after hours high, whichever one is higher, the after hours high is down here. The pre-market high is right here, or right here, I'm sorry. Basically, the open was the pre-market high. So when they do that and then they come back and test the moving averages, and then they come back and make a new high, which they haven't quite done yet, or did they do that here? Did they just make a new high? Very close. Yeah, they make a new high. That tends to be a setup for a trend day up. Same thing to the downside. If they break the pre-market low or after hours low, in this case it would be the after hours low. If they broke the after hours low, back tested these moving averages, which would be down here somewhere, and then broke down below this low, that tells you that they're trying to set up for a trend day down. We are still seeing a little bit of dropping on the ADD. It slowed a little, but it's still at 150 after being at 650. We are still in the opening 15-minute candle, so still establishing the opening range. And then we'll make our decision, or make our first conclusion of the day after that. Let's go look at options prices real quick to see what they look like. Those are always a nice tell. Options prices are really high today. And I'm pretty sure we don't have any key catalyst in the middle of the day. So I would expect at least some selling today. With options prices being over $2, that is a very strong sign of volatility in the market. Volatility doesn't necessarily mean we're going to sell for the whole day. It means two-way trading. So on very, very low volatility, options are about $1, and you normally just kind of see this kind of price action, like we did basically yesterday's price action. Maybe not that strong, but that type of price action. Just grind higher, pull back, check in with the moving averages, grind higher, run a couple traps, keep grinding higher. When options prices are very high, they're saying that at some point you're going to see at least something like this, if not something like this. Or just, sometimes they just pull the elevator out and run it. But I would say at a minimum, we're going to check in with the pre-market low today at 773 and maybe, or more likely, yesterday's close at 771. Again, as we talked about in the morning, we're looking for the ES to top around this 7,800 area and pull back and check in with the old highs because they just blew through them and didn't run any kind of resistance there. So almost always they're going to back test that level, and then we'll see what happens there. If you're curious, I believe that level is about 7,700. Let's go look real quick. That level is 76.94 roughly, so we'll just call it 7,700. Around 7,700 will be very important today to understand if the market's going to try to create a selling event or just give a normal, healthy back test to the prior highs and then bounce and continue. I would say if you are um, if you are long here, just be cautious. They can still run this up before they sell. They don't have to sell right now, and they are still holding the moving averages. But if you are long and they start to close below this 21, then I would expect a 2 to 4 point drop minimum. Nasdaq not fully on board with the selling yet. ES is selling stronger. SPY is selling stronger than NQ. We zoom in on NQ a little bit so we can actually see the chart. NQ is selling, but I mean, it's not even below its 1 minute 8. This is the 1 minute chart, and it's not even below the 1 minute 8 yet. So not nearly as strong as, say, the ES is. SMH has found some strength as well here. So we'll see if that continues. SMH is one that also came into a key resistance zone. I don't have it on this chart. I'd have to go to the other chart for that one. But if we go over and look at SMH really quickly. Yesterday they came into this key shelf that they broke down from, and today they're trying to get above it. If they fail back below this shelf, I would look for very strong selling, at least back into 537. And then we'll see if they can hold that and create kind of a inverted head and shoulder look where they come down here and do this. That is certainly a possibility. If they just continue through here, expect a squeeze. This area here, they're trying to create a squeeze. They do have this resistance right here at basically 587, which is slightly above where we're at now, 582 to 587. That would be a very common target for them to turn down off of and then run a trap of this breakdown shelf. So I would be cognizant of that area as well. Let's get that graph off of there. Yeah, until NQ gets on board with selling, this isn't going anywhere. Still seeing a little bit of a drop in the ADD down to 109 now, but it's definitely slowed down. NASDAQ is creating new highs of the day. Or trying to. This candle right here is the high of the day, and they're right back into it. So until NASDAQ gets on board with some kind of selling here, we are going to either chop sideways or continue to grind higher. But the options prices are telling a different story, so I'm curious to see how price action plays out here. As always, as we wait, if you have questions, I'm happy to answer them. Can't go break down other stocks and stuff right now. That's the afternoon call, so you can come back for that at 3:55 p.m. We do a closing call every day, Monday through Thursday, but I can't answer general price action questions or whatever other questions you may have. Let's see what the 30-year is doing today. 30-year back up 0.25%, still well over 5. This is a problem for the markets, by the way. Bitcoin still toiling. Gold, look at gold. Finally got off the mat. Gold and silver should be due a fairly decent bounce here. We've been waiting for him to get off that most traded level. SPY very much trying to break down here. NQ just not having it right now, so it's going to be a battle. And until NQ gets on board, it's not likely the SPY is going to be able to break down too far because of all the overlap in the ES and the NQ. Now, closing below the 21 is your first warning sign. There's acceleration. That's not good for the bulls. Here comes some selling on the NQ. Not a ton of selling. This 30,000 level, remember I said, is extremely important to the NQ. It is a highly, highly, highly traded zone. It is the pivot. If the bulls are able to solidly get through 30,000, then we can grind to new highs on the NQ. If they fail here, though, then we could see at least selling back into that 7,700 zone where the prior highs were. And then we'll see what happens from there. But this should be a major battle point for the NQ at 30,000. I would expect at least 772, 98 on the way down here. That's your pre-market low. And very often they will hit the after hours low at 771. That does come with one caveat, by the way, that this candle doesn't reverse and green out. So they got down to the 21, they're trying to push away from it. If they reverse this candle and start to drive back higher, then it's just a trap. But as long as they continue to close this candle down, I would expect at least 772.98 and then that 771.01 area. Remember, breaking support or breaking resistance isn't simply getting above or below the line. It is giving confirmation. And again, that confirmation comes from breaking below, usually back testing, and then breaking down. Do your indicators get coded by an actual person or AI? An actual person does the base does the main draft. And then when we start to get to places where we have more headaches, we have AI scan the code to see and tell it what we're seeing, and then see if it has either workarounds, because sometimes Pine code is ridiculously stupid. So we look for workarounds or mistakes in the code, or something that there's a lot of referring back to other areas of the code, and sometimes you forget to make all of the areas look back. So like 3 of the areas are looking back where they're supposed to look, and then the other 2 are not, and you're like, why isn't this calculating right? And the reason is because you didn't get all 5 spots to look to the same place. You forget those things. So AI is really good for cleanup. But I have a person start the code. This will be an interesting candle because they ran it down. Now they've back tested on the same candle. Generally like to see the next candle back test, and they still can, obviously. But if they either close this in the moving averages or red, that's a win for and then the next candle starts to push down, that will be a win for the bears. Closing red, especially down here below 775, would be a win for the bears. Closing in the moving averages will be to be determined. Again, given options prices, I do think we still need we'll probably see a little lower today. Maybe a lot lower. The options prices are pretty high. $2.20 for a at the money option is It usually is indicating a more selling than what we've seen so far. 10 a.m. They're releasing the jolts. Could be a catalyst. Yeah, the jolts ain't a $2 catalyst though. $2 means so you may even on Fed days, options prices are around 220, and Fed days are going to move the market more than most things. CPI days where they're expecting big moves. Obviously that's pre-market, so the day before they're very high. But in general, a random day with no real news, or at least public news, that has $2 options prices in general is a very big warning sign to the bulls. Might be going lower than pre-market highs here on ES and NQ. Well, they did. I mean, they did get a little lower, but they couldn't hold it there. They came back to the pre-market high, and then this candle kind of. If they get back above these highs after that spike down, that's a big win for the bulls and a problem for the bears. Um, but if the bears are able to continue here with this selling, that would be very likely continuation down to 772 and then 771. What are the moving averages that you use for this particular chart? The 8 is the red one. That is your momentum. The blue is your 21. That is your trend. And black is VWAP. And it's more of a backstop of where price is. It can be much higher or much lower than the trend. Right now, it's right in the center of it. So this is going to be a strong area for the market to get above or below because VWAP 8 and 21 are all congested. However, what that means is when you have contraction, after that comes expansion. And whoever wins this battle is likely to push pretty hard because those moving averages will start to expand back out. In general, overall, I also use the 50, the 100, and the 200 simple. These are EMAs. So this is the 8 EMA and the 21 EMA in VWAP. They're very good for trend, short term, well, any trend, all charts. 1 minute all the way up to 1 day, 1 week, 1 year, whatever. You just got to understand there's relative distance and difference between the 1 day and the 1 minute chart. Being 10 points away from the 1 minute chart's a lot. Being 10 points away on a 1 day chart is nothing. Can Pivot Point Pro give a sell, or is it locked out because of trend day parameters? Good question. We did get trend day here. However, it didn't follow through with enough inertia. So usually it's looking for trend day and then it's looking at strength of move, volume, different things that confirm. We didn't necessarily get that yet. Also, it won't give a sell right now because you had a very choppy run here. So you had ES give a sell over here, but NQ didn't. And then ES now has moved out of that sell, which tells you we have choppy behavior going on. So it will filter because of that. It doesn't want to give choppy environment moves. Even if we drop really hard, you have to understand, if you're new to the stream, why this works. A lot of time when ES and NQ are not syncing up, you'll get days like this, and you'll get a lot of lost trades. And then maybe they do this or this, and you didn't get that one trade, but you might have missed. You had 4 losses building up to that one trade. And so it's not worth trying to catch that one trade because a lot of times it doesn't even happen. You just get sideways chop. And you end up blowing a lot of money. And then in hindsight, you're like, oh, there was the 30-point move I should have had. Well, yeah, but you also lost $3 trying to get that 30-point move. So in essence, you either broke even or even lost a little money. So it filters based on likelihood of continuation in either direction, in this case to the downside. And when you get failures on one chart and not the other, that it tells itself, hey, that's not a good sign for the downside. Well, here's your JOLTS data, I guess. Here's your 7 a.m. catalyst. We'll see. The bulls have had every chance to break out of this high, today's high, and they come back to it again. If they don't break it here, that's a problem. That's going to be some selling, and I do think selling's coming based on options prices because they set the high, came back to the high, came back to the high, came back to the high. They haven't been able to break it. And if they come back down and break this low, it's a failed breakout. And you're, like I said, you're looking at least 772 to 771. Hey, Jacob, is there any way that IWJ Sniper could have armed setup alert? It will have armed setup alert. It's going to be in the next release. Just right now, we haven't put it out because we're working on a couple other things with it, but it will have that in there. It had to be fixed, is why we took it out. It was giving way too many armed alerts that weren't. It's not that they weren't firing. It's two things. One, the V-shape armed alert doesn't know the entry price, so it could arm and give you a price and then enter at a different price, and that's confusing. So I wanted to set that straight. And then two, you can get armed alerts that are armed but never fire because they break the low, and it was giving too many updates of that where it would say armed alert, and then the next bar it would say armed alert, and then so we're trying to fix that as well. But yeah, it will be in there. At least if the pop-up window could have take profit 1 and 2 numbers, that would be awesome. They do. So if you look down here, I mean, this is not the live version, but it's still the same. You have stop, entry, take profit 1, and take profit 2. The only ones you don't have that on is 2.0, and that's because it doesn't know. It's that one is about market conditions, and when the market conditions change is when you take profit. So it doesn't know the take profits on the 2.0 version, if that's the one you're talking about. Is there a pricing symbol for options pricing that one could chart? No, I just go to the options, like the order screen, the trade screen or whatever, and I just look at the money options pricing. And right now, the at the money call is $1.93 and the at the money put is $2.14. So they're basically $2 because you're closer to one side than the other. So I just call that a $2 average. And when options prices are an average of $2, that usually means selling. And we're seeing, some selling. Nothing that makes you go, wow, the market's crashing or anything yet. I did say yet because $2 is a high price. That means they're expecting a 40-point move on the day, or a 4-point SPY move essentially. And you have a 4-point move up so far, but it's pricing that in with volatility, saying that the chance of selling is high. There's clearly a lot of sell orders that they're worried about. The market makers are worried about. Still having trouble getting through the moving averages though. This is the most traded zone, this black line that comes across of the day. So they're basically trading it at the most traded zone. The winner of this zone will likely win, but the bears are weak in the sense that they've had opportunities to take it down as well. So basically, this is going to be a battle royale. Bulls have had every chance to break out. Bears now have had 2 chances to take it down. This was the easy, should have been breakdown, but they trapped them, and then they're coming back down. So we'll see. But options pricing says that we're very likely selling more than this today. And remember, That doesn't mean it's going to be a red day. They can absolutely do this. But this is, the markets don't like this. This makes them uncomfortable, so options prices become high. Sonny, are you PT and me or just me? I see you in here. I'll give you permissions in a second. I just need to know which one you are. Guys, I think I'm going to take a short here. This is not an indicator trade, obviously, but price action here is dictating a failure. I got 775 for $1.75. I'm going to put my stop up here basically at just above the high. So I'm going to put it at 770, what's called 777. This is I think, high reward, medium risk trade. I think the reward is going to be very strong to the downside should they fall through. And the bulls have had every chance to break out. They're failing. We've come back to the most traded zone several times, and a breakdown here likely leads us down 3 to 4 points. And I think probably pretty quickly once it starts to break down, if it starts to break down. So take at your own risk. This is certainly not a this is a trade where the old indicator probably would have had a short here. I can go look in a second, but in general, I think we have a pretty good setup for a failed breakout. And if they do break out, we'll take the small lump with the chance at $1 to $1.50 reward. So I'm thinking probably 40-cent loss to $1.50 to $2 reward. So it's not blow you out of the water risk reward, but the potential is for a fall through. I mean, 771 is a 4.5 point drop from here, and if they fall through that, then you do have the potential for a pretty significant move. But that is the trade. I'm taking the trade. Again, this is a just price action trade, and looking at this looks like a pretty decent failed breakout setup. And as long as they hold this high, I think it plays out. But that is my trade, so you guys are welcome to follow along if you want. Essentially what you have here, by the way, what I'm looking at is you have a set high, then they fail, right, back below the most traded zone. They get back above the most traded zone but can't break the high, then come back to the most traded zone. It tells you price generally wants to be down here. and should eventually follow through without breaking that old high. Now, if they do break the old high, we're dead wrong, but that is generally how that works. Oh, there you go, Joseph. Will says he charts options prices on Fidelity, so there's that. I don't have Fidelity, so I don't know how to do that or what that is, but there's that option. Godspeed. Thanks, R. Smith. I appreciate it. My trade is shorting 775, Jeff. I didn't put it in the room. This is a stream trade to see if they can fail here. It's not what you would call an official trade. I think this setup is pretty good, and if they do fail, it's like I said, the risk isn't terrible and the reward is pretty good. I'm very likely to let them run it down to the 772 area, 773 area. If they do start to break down, that'll probably be where I look for my first profit. Just got to get through this zone. If we get through this zone, it should accelerate. Once they break below the 21 again, if they break below the 21 again, that should cause acceleration because you've cleared at that point. You're clearing the most traded zone. You're clearing all the moving averages. They're essentially trading VWAP as the most traded zone right now, and as long as they're above it, bulls are in control. But again, this setup here is very common of a failed breakout. That coupled with the falling ADD, that coupled with options prices, when you have all three price action, options prices, and ADD falling, that generally is a pretty decent sign. Need NQ to accelerate to the downside. They are making lower lows and lower highs right now on NQ. This is the 1 minute chart though, so certainly nothing to be like, yeah, look at that. It's not a trend in any way yet, but the 1 minute chart is at least making lower lows, lower highs over here on the NQ. We just need acceleration for the downside. What is the stop again? The stop is 777, just above these highs. And a liquidity grab, yeah. They may spike up and then come back down. That we could get stopped on a fake out here, a trap, if you will, where they do this. I would hope not, but they've already kind of set the trap where they made the pre-market high, came back, got a nominal new high, then came back to it again. That's generally the trap you're looking for, especially when they fail it, but they may not be done trapping. 777. Did they not say this market will allow no pullbacks? No, they definitely seem like it, but just the last 4 days though, it was pulling back before that. Right now, all they're doing is burning premium, which is why options are so annoying. Futures are better for that this kind of thing. Well, we're kind of narrowing our look here. I mean, you've got a pretty condensing or contracting structure here. So decision time should be incoming, if not now. Well, let's make a decision here. Bleeding out is the worst. This is the worst possible place to be, where they just go sideways and eat premium. And on high premium days, that's a bad thing. The Bulls are just hanging in there, but they've had every opportunity to squeeze this up out of here and have failed to do so far. So the Bears have the ball. If they can follow through, they will uh, they will break down pretty hard once and if they can get below this most traded zone. But the Bears have not been very present in the market of late, so might take them a while to get through here. There we go. Come on now, push. What prop firm did you use for the challenge? It's Take Profit Trader, and I like them. Their customer service is good. They pay out right away. They'll let you run 5 accounts at once, so they have a lot of positive um, qualities. They're challenging. It's a challenging test, I'll tell you that, but it's a good firm. All right, come on, follow through now. Just follow through. We're there. Just follow through. Take Profit Trader is great. However, their customer support on live is way slower. My first and only headache with the company. Some tickets take 2 weeks to be addressed. Yeah, so that's a fair point, Jack. They have their customer service is great as far as taking care of you, but their response times can be a little bit slow if you have an issue. It's pretty annoying. All right, looking for some acceleration here now. I'd like to see them come down and break through this low. Um, that's going to be the big one. They trapped below it last time, so this low should break if this one breaks. This red line here is a call resistance line from Mentor Q. So it's going to be good support. They trapped it here, ran back up out of it, and now they're coming back to it. So if they come back to it, they should break through both of these lows pretty well. There's some acceleration. Come on, pick it up now. NQ coming into a key area. If they can break this little, it's a 1 minute shelf, so it's not like it's a big support, but it is a support. They've obviously shown that this area over and over again has been important down to 29,894. 29,894 is the real repeated shelf here. Even on the 1 minute, it's shown to be very important. Okay, there's the acceleration and the break of this low. Now I got to come down and break 774.38. Sean says that was a great entry. Thank you, Sean. We're not there yet, and trapping here would suck. Um, Jeff, you asked what my first take is. 210 will be as 20%. I'm going to take a third off there if we get back down there. This is not a great. Hopefully, this is a back test and a fail back down, but not great of them running a trap of this low, but not getting through this low. They were a nickel away from 210 as well. They were very close. Thought we'd get there. But again, NQ came right down into that support and bounced right here. So coming back into the resistance zone again, we'll see if they can reject. Twice now they've broken through the moving averages and not been able to hold, and that's not great, being honest with you. So we'll see who's trapping who. Are they trying to get the early shorts out here? Or the late shorts, the guys who got in down here, I should say. Um, and then come back down and break down. All right, now we're getting somewhere. Come on. SMH giving back here. If SMH can go red, that would be a very good sign. And it's trying to. It's only up 0.09% now, 50 cents. It was up almost a percent earlier. So we'll see if it can give some back. NVIDIA, nice day for NVIDIA. They're rallying into their earnings at the end of the month. Starting to see some of the Mag 7. Microsoft's down 0.5% now. Meta's cooled down a little. Nvidia is driving. They're up 4%. That's a big day. Elon said we're exclusive to Nvidia chips on the SpaceX call. Yeah, I mean, the chips have plenty of good news. They don't the news isn't what's pushing them. AMD and I think Taiwan Semiconductor had just unbelievable earnings and both got smoked. Um, the chips have plenty of good news. They have plenty of revenue. They have plenty of people buying their stuff. They don't need headlines to push their prices. On TNS ADD chart, do you trust more price moving above or below zero line or just strong in one direction or the other? It really depends on where they start from. So if they are 1500 up and they get down to zero, that's a pretty substantial move. But today they started 500 up and they're kind of floating around 120 or so. They've been between 120 and 150 for the last 45 minutes. So they haven't really dropped off. So that's not a huge move. On those types of days, I'd like them to break below zero and go negative, um, to show that the market is truly turning over and not just consolidating, and that it's more of a broader market sell. Um, so it kind of just depends. If they're very, very far away from zero and they get back to zero, that's usually a reversal in trend, and you'll usually have already seen it on the chart. All right, bears. Now let's finally follow through. Quit trapping. All this chop is annoying. See what we can do here. All kinds of traps being run. All right. I'm going to close a third there at 210, and I'm going to move my stop to 175, which is break even for me. If they come back up to the most traded zone again, I just think that this is likely a weak selling move and that ultimately it will be bullish. So I'm moving my stop to $1.75, and I will take a small profit or a big win here. My next take will be 773, which is about $1.50 down from here. Sonny, I can fix your issue, but I asked you if you were both rooms or just my room. There's the break of today's low, today's regular trading low, so that's good. Now we should be able to follow through. SMH quickly turned negative, is now negative a half a percent. NASDAQ is closing the gap and turning negative. ES still has 30 points to go before it closes the gap, so we'll see if this gap close on NQ is going to result in a bounce or fall through. This is a good place to be in trading where you've already taken a profit and now you either make a very tiny profit or you make a very big profit. So that's kind of where you want to be, where you've taken some off the table. This is a trading lesson, a risk management lesson of don't just assume price is going to move forever. Take profits where it makes sense. That 20% profit was essentially at this low and we're at a battleground. So we took profit there because they can absolutely hold this low and reverse on us and get the heck out of here. And if they do, we make money. And if they don't, we continue to the downside and do all right. Okay, Sonny, you should be good now. For the trade, how many contracts are you trading to be able to reduce position at profit? Well, for this one, because options prices are over $2, I only do a half position, which for me is 25 contracts. A full position is 50 contracts, but that's based on bankroll. You can do 3 contracts and take one off, or do 2 contracts and take half off and half off. Just depends on what your bankroll is, what your capital is, and how to manage that properly so that you're not overextended on any one position. You should never be putting in all of your money on any position. That is a instant way to bankrupt yourself. I know because I've done it in the past. When I was a young trader, I blew up several accounts, and once you do that a few times, for most people, probably should only be once, but I was young and aggressive and stupid, and thought I knew everything, and my arrogance got the best of me. And now this is why I tell everybody all the time, I'm going to give you a bull path and I'm going to give you a bear path, because I don't care what the market does. I just want to know which path is playing out and what the key levels are to kind of confirm that path. Then I'm going to look for the trade setup for that path and trade that. I'm not here to tell you the market's going up or down. I'm here to tell you when I get the right signs of it going up or down, I'm going to trade it. But here's how you know when it's starting to go up or go down. For instance, today, they came up, they trapped, they came back up higher. They did not make a new high. They came back to the price they wanted to be at. It tells you price wants to be down here, so they follow through to the downside. That is a setup for a failed breakdown. If you couple that with the information of options being exceedingly high, it tells you that the market wants to do some selling today. And it may not be a sell off, but they wanted to do some selling today. And you're seeing that here, off the highs at 776, they're down 2 points, which isn't like a monumental move, but they're not done yet. They could absolutely make a monumental move, and they could come. Very often, they're going to come down to 771. That's where we'd like to get them down to, but the general target is 773, or the first target, I should say. Sonny, you stepped out. I didn't put it in day trade alerts. It's not a trade that we took based on the indicator. It was just one I took based on price action. So it was just more of a stream trade. So that one, we had a trade on here. Two, the setup was good, so I liked it. So kind of a benefit of being on the stream is you got that free trade. So I did not put it in the room because it wasn't an official trade. So I probably won't wait until 773 exactly. I'll probably take off at yesterday's high at 773.41, or maybe just below that. The reason being is they like to run a lot of traps like this or like this, where they almost get to where you think, and then they're out the door and you're screwed and you never got to take your profit. So I will probably take profit a little bit before there, but that's where I'm looking for next. And here's the thing. Here's another kind of um, trading risk management philosophy you should put into play however you want to do it. You don't have to trade exactly like me. There's a million traders who trade very differently than me that are very successful. My way is also successful. It's just what fits your trading style. Some people are more aggressive. Some people are less aggressive. I get it. Some people want to take profit here because they're up 75 cents, which is a really nice place to be. I won't doubt. I won't blame you for any of those things, but you have to be willing to let your position play out to make money. In other words, they might chop here and make you scared that you're going to lose your 75 cents that you had. Well, that might happen. It does. It happens from time to time, and it's part of trading. if you don't let your full position play out so you can experience the risk reward that you're looking for, then you're shorting yourself, and then you're always going to take max risk and never get max reward. And that skews your risk reward very much, because if you're saying, hey, I get 3 to 1 here every time I win, or whatever the ratio is, but you're only taking 1.5 on the profit side, and you're still taking the 1 on the stop side, which most people do. They let their stop play out or extend their stop. They get very scared of their stop being stopped out because they think the trade's going to be right. I don't care. When the stop hits, even if the trade goes back in the other direction, trade's over. So most people get scared of losing their profit, so they never get to experience the full gain of the profit. And that skews your risk reward very heavily to the losing side. And that makes a big difference in the long run, especially depending on how high of a percentage you hit on your trades. If you're 3 to 1, you got to win 1 out of every 4 trades in order to break even, as long as you experience the full 3 to 1 on your winner. Most Wednesdays we get crapo opportunity for trades, like being jinxed. We have been jinxed on Wednesdays a lot. Glad you found a manual one. Yeah, I mean, the setup was there, and I knew we weren't going to get a Pivot Point Pro because of the chop. The chop was really nasty. So if the setup's there, and you got the look you want, you got to execute. So I figured we'd take it and go with it. Coming into yesterday's high, which should be some kind of support. Again, that bounce can be all the way back to the 8, or they can bounce from here all the way back to the 8, come up short of it. Right now, NQ is red, so they've closed the gap there, so they didn't bounce the gap yet on NQ. ES still has 28 points or something, 26 points to close the gap if they're going to. I definitely would have missed that trade. Most of my losers are from trading chop. Well, that's the thing, is chop is where they're setting the traps, and you have to either have the time to withstand the trap, um, or be trading futures where time isn't nearly as relevant. But the trap is to set a low, set a high, and then make a whole bunch of, are we going to do it? Are we not? And if you know that the high is set, and as long as that high stays set, downside is the play, you can wait out this chop right here and let it fall through. And while it sucks, options are the kind of the worst way to do it. Futures are much better for that type of trade because you don't have the time factor and the theta burn that you have with options. If you understand how the trade's supposed to play out, you just have to be patient and let the trap finish, and then you should be on the right side of the trade most of the time. We do have a buy warning here on Pivot Point Pro on the screen. Um, I'm going to try to let them come down here and take a little off because that does tell us that the move down is weakening and they are at yesterday's high, which should be support. The buy warning doesn't have to A, play out, or B, run back up very high at all, but it could, stop us out. So this is a point where the indicator generally knows better than I do what's going on under the hood. So um, I'm going to close another third here at 225. And then if we get a buy, we'll close out and reverse into a buying opportunity. But I did close a third there at 225. Still have my stop at 175. This could absolutely just be a back test of the 8 to see if momentum is going to continue to the downside. So be very cognizant of that. This will be a spot where if they fail, if they get back to the 8 and fail to the downside, you should see acceleration down. You want to see the bears start taking control and pushing a little more than these bars. I mean, these bars aren't bad, but you want to see them kind of break through some support without thinking about it. Otherwise, it's just a very controlled sell, which it kind of looks like anyway. We close if we get a buy signal. Yeah, I will close out if it gives us a buy signal. Regardless of how it plays out, we will still make money. And we may flip to the buy if I can do it fast enough. But if it's a squeeze where they run out and I'm just trying to close out the first trade, setting up the second trade is going to be a little tougher. Normally, I'm not flip flopping trades like this. I'm just set up for the buy and ready to go. Now I have to close a trade and open a trade, and that's a little time consuming. So as long as they don't move it up out of here at the speed of light, then I would take the buy. But I do have a feeling they're going to reject. I don't think they've sold enough to fulfill a $2 sell day or $2 option day. Again, rejection can come up from 775, 776, the most traded zone. They can backtest that again. They don't have to reject right away, but I do feel like they have more selling to do. All right, key time here. They reach the 8. We'll see if they can reject here. Prop firms don't link up with your own brokerage. No, it's not done on their site. No, it's done on. So they will link up with some brokerages just depending on who you're with, but you use their account. So it's not you using your account on the brokerage. You're using their account, and then um, they make money off of your successful trading. So they want you to be successful. Um, Obviously, they make money on failures too, but if you are a successful trader, you're going to make much more money than you would as a failed trader for them than you would as a failed trader. So you trade on, for instance, I use Tradeovate. So I use their account on Tradeovate. I mean, it's assigned to me. It's my account, but it's through their firm, if that makes sense. But it's on a, you know, you can use NinjaTrader or TradingView as well. There's the rejection of the 8. We're continuing to the downside. Hopefully now we see that follow through and acceleration that you want to see in continuation patterns. Making a new low here tells you that this is just continuation. They set the low above support. They came back and back tested the momentum, and now they're back at the lows, which means the momentum should kick back in, and we should see them start to push down here. It does not matter if it's a simulated or real money account. You start on simulated accounts to prove that you can trade, and they still pay you out. And then you move to a real money account. All right, I'm going to move my stop to 240. For my last third. They did spike through the pre-market low, but now I'm kind of looking, since they came down close and came through, I'm looking for the after hours low at 771. If they don't get that, I get the 240 and everything's, great. So either way, we make money. Some money more, some ways more than others, but if we can get that acceleration to the downside into this 771 zone, that would be a gap close on the ES, and that would be an area that I don't know. I might take off half of my last third there and then see if we get a runner. So a sixth, if you will. Transports red, RTY red, SMH solidly red. Some major players have switched directions here. Something to keep an eye on. SMH and both Dow Jones Transports are both solidly red. Now for SMH, solidly red at 1%, they can move past that real quick. So 1% used to mean a lot. Now on SMH, it doesn't mean all that much, but it's still solidly red. I like the third profit taking. If you take half off at first profit, your chance of being a big winner is shot. No, it's not. I mean, you don't go half and half. So in general, you would go half at first profit, then you would take a quarter at your next profit, then an eighth, and you just keep dividing it down until you get down to where you only have like 2 or 3 contracts left. If you're strictly taking half and half, yeah, it limits your ability a little bit, but it also keeps you in play and keeps you moving forward. The late David Frost always used to say base hits gets you in the Hall of Fame, unless you're Pete Rose, of course, who should be in the Hall of Fame for a variety of reasons. But anyway, base hits get you in the Hall of Fame. You don't have to hit home runs on every trade. And Pivot Point Pro has proven that time and time again, where we take 20-cent winners, 30-cent winners. You know, if you're trading 50 contracts at a time, you only need to average 8 cents a day to make $100,000 a year. 8 cents on 50 contracts is $400. $400 times 5 days a week is $2,000. 2,000 times 52 weeks in a year is $100,000. So you only need to average 8 cents on 50 contracts to make $100K a year. Now that's trading 50 contracts. I get that. So you have to have the bankroll to do that or the capital to do that. But people think you have to have grand slams and home runs to make money, and that's simply not the case. So if you're taking half up front and your wins are 20 cents to 40 cents at a time, those are really good days. But you have to work your ass off? I don't know. I sit at a desk and watch a computer and wait for it to tell me to trade. Or I make the trades sometimes like today, but I don't know. I think you just have to be disciplined. 100K a year isn't what it used to be, especially if you're buying your own health insurance. Well, I understand that, but I'm sure there are a lot of people who could use an extra 100K on top of their salary, or who could make 16 cents instead of 8. You know, I can tell you the average salary in most states isn't 100K. I agree with inflation and stuff. It's not what it used to be, of course, but Okay, I got stopped out there at 240. So nice winning trade there. Hopefully you guys followed along. You can, stop out there, stay short, whatever you want to do. We had a buy warning here, and they did spike through the target. So remember the target was the pre-market low, and then the next target is 771. But this was the one they're going to hit more often than not, or they're going to hit almost every time, I should say. They'll hit this one a lot, this after hours low. So they could absolutely fall down here and come back through, and I think probably they will. But they've hit the target. We got stopped out. We had a nice winning trade, and yeah, hopefully you guys enjoyed that and played along. All the fake guys on the internet buy 40-cent one-day options and make 20K in a day. Well, if they document it live, I'll believe it, and they may do it sometimes, but I can tell you that that's a pretty tough strategy to execute, and there are going to be a lot of not 20K in a day days. Those are all, almost all lies. And it's all relative to your bankroll. If you're bankrolling $10 million, 20K in a day isn't that big a deal because of the trading volume you can do. If you're bankrolling $1,000, well, it's a little different. $20 in a day is nice. I always learn something new, but that trade with the chop breaks my rules. Well, it's more about recognizing the pattern they put in there, the trap. It's a pretty standard trap, and they run it in both directions. I talk about it all the time, and if you can spot it, where they do this, they make the high, they get back below wherever the breakout was, they come back up, they can't make a new high, and then they come back to wherever the breakthrough was. That tells you they want to fall down. Same thing in the opposite direction. All right, the guys, with that, we had a successful trading day today. We made some money. I only have an hour until my next call, so I'm going to go ahead and take a quick break, use the bathroom, let my dogs out, do all that kind of stuff. I appreciate everybody being here. Hopefully you enjoyed it, learned something, and made some money. We will do this again next Wednesday, but this afternoon we have closing call at 3:55 p.m. and tomorrow at 3:30 we have the end of the week closing call. So check those out as well. Hit that like button. Guys, subscribe if you haven't subscribed so you make sure you don't miss these and they come up in your feed, because we make money, we help people make money, we teach the market, and it helps me with the algorithm. So I appreciate it if you do that. Hit the like button, share it, subscribe, do all those things. And listen, check out Invest with Jacob and sign up. This is the kind of stuff we do all the time. And if you want to be part of a winning team, we would love to have you. All right. Appreciate you. Have a great Wednesday. Have a great back half of the week. If I don't see you till next Wednesday or hear from you till next Wednesday, have a good weekend. All right, guys. We'll call it there.